I'm here today with Gavin Lockyer. He's the Managing Director for Arafura Resources. How are you?
Good, thanks, Tracy, and thanks for having me back again.
Gavin, we always enjoy getting updates on Arafura Resources, so why don't we start about the further cost savings that you just put out in a big news release about lowering the OPEX and the CAPEX cost. Where do you want to start, OPEX or CAPEX?
I think I'll start with the CAPEX. We announced, obviously, at your function in Toronto last year that we were targeting significant capital cost reductions, and we've been addressing those along the way over the last 12 months, and this is sort of the accumulation of that work. So we've managed to achieve about 500 million odd in CAPEX savings. We're looking to further refine that as our Chinese optimization programs continue. But I guess the big winner really is our OPEX, which we've managed to save about $4.80 US a kilo of REO on our OPEX, and it's now down to about $15.60, which, according to our intel, probably puts us right in the middle of the cost curve in terms of both producers inside and outside of China.
I got to be honest with you, Gavin, there's so much contradictory and conflicting information out there, as usual, in the rare earth and technology metals sector, that I'm going to have you back up a little bit for our investors that are out there. Now, right now, I see that you've got 98 million per annum. Is that correct with your OPEX estimate? Can you explain a little further how many years you're talking about and give the audience a bit of an overview again of Arafura Resources?
Sure. Our Nolans deposit in Central Australia, we've been working on that in terms of test programs and flow sheet development for the last 7 years. And it's a unique ore body, and hence the reason it's taken so long for the development process. But we're well on track now to commercialising the resource. We announced our maiden ore reserve last year. And these latest CAPEX, OPEX numbers only go to enhance that economic assessment. The savings of that you mentioned of 98 million are actually per annum in our OPEX, and that's over life of mine, which is currently about 22 years based on the ore reserve. However, we do know that there's much more of the resource there. It's open at depth and certain places along strike. So we're well placed to service an industry for many years into the future.
Let's just discuss a little bit further this Chinese optimization program that you were providing an update with. Can you give our audience a bit of an overview on what this is? Because that was a large announcement when you made that last year.
We signed a memorandum of understanding with Shenghe Resources in September last year, and Shenghe are a Shanghai Stock Exchange listed company who own and operate a rare earths mine and plant in China, and they also export approximately 4 to 5% of their product into the current Chinese quota system. So they bring with them the expertise and a path for us all the way through from mine site all the way through to end user. So through them, we have engaged with other Chinese experts to look at our flow sheet, to optimise it, and to hopefully fast track our construction and ultimate production.
Okay, so with the race to rare earth production being on right now, Gavin, what is our timeline to production?
We're hoping to optimise the process, as I said, through the Chinese work this year. By the end of this year, we hope to have a more definitive engineering study that we can then go to potential financiers with. So we'll be looking to finance and possibly order long lead items throughout sort of towards the end of next year, and construction to start in 2016. You can argue with an engineer about whether it's going to be 18 months, 2 years or 3 years for construction. We're not quite sure yet. It will depend ultimately on who we get to do the work. Again, the Chinese Shenghe are introducing us to engineering firms in China who actually construct rare earth plants. So it's not like we have to go to a Western engineering company that hasn't done this before. And we're hoping that can hopefully fast track some of our construction and get us into production sooner.
So would you argue, or would you contend that another advantage that you have, of course, are with these Chinese partners that you've established, that, of course, you already have a buyer, which, of course, is the most competitive advantage? I mean, some analysts have argued that you can have everything in the ground, but unless you have an end-user agreement in position, it's really worthless.
Absolutely. I mean, financiers want to see offtake arrangements. And in terms of the Chinese and our relationship there, there is absolutely no agreement in place, nor has there been any real discussion around Arafura's product going into China. So their assistance in terms of marketing is actually allowing Arafura to be introduced to their existing off-takers and potentially supplying them with more product as they may wish, which will be obviously outside the Chinese quota system.
So the ruling that just came out with the World Trade Organization, how do you think that's going to impact prices?
I guess initially you're probably going to see a spike in price, but I think the real reality is that over time you are going to see, in my view, production in China will actually probably reduce. I think they may remove the quota system per se, but they may actually just minimise production. And why wouldn't you? To be perfectly honest, you need product to produce and feed your own people. So why wouldn't you restrict supply to, restrict production to meet your domestic demand? The discussions I've had with a number of parties around the place have been that Linus and Molly and ourselves and a couple of others would more than adequately feed the rest of the world. So all I can do is get out there, promote Arafura, and say to these government bodies, how about coughing up some money and helping us get into production to ease your supply situation.
Gavin, thank you so much for joining us this evening.
You're welcome, Tracy, and it's always a pleasure to speak with you.